Welcome back to Opening Bell. Stocks are under some pressure here today. The Dow's down 516, the S&P's down 1.25%. You have some trade tensions sort of heating up again with China, so expect some volatility. Friday down, Monday up, Tuesday down. Hard to say, but Hilary Kramer, founder, CIO of Kramer Capital Research, is with me now here on set. And we were just talking about the run-up. And look, this is 3 years of the bull market. Is it going to be 4 years bull market? What do you think?
I think we're going to see some big upside, but big volatility over the next few months. But we need a correction. It's time for a correction. And that just means trimming the portfolio, just enough so that when the downturn comes, you find it's like a buying spree. It feels like everything's on sale instead of being worried and panicked.
I mean, so far, earnings season is underway, and we're hearing some great news. So far, we heard from JP Morgan, Citi, Wells Fargo, BlackRock today. It's been mostly good news. What do you think about earnings season, and why does it matter right now?
Earnings season matters really now because if there's even a hiccup, or if there isn't the most positive news, the market's going to really. The market's in such an anxious state right now. We could see some real downside, and then if there's some surprises to the upside, we could see some 25% upsides, even in some of the mega caps.
So, I mean, when you talk about the Mag 7, is there a name in that group that you love? I have to ask. I mean,
not right now.
Do you have a favorite?
No,
not right now.
I don't.
Also when we think about, we got the bank earnings in here, and we've seen a lot of IPOs. I don't know if that slows. We have a government shutdown. How do you feel about the government shutdown, its relation to IPOs and anything else?
Well, it seems like there's this disconnect, right? The IPOs are going strong. And it was very interesting looking at Goldman Sachs' earnings today because their investment banking revenue is just off the charts and how much stronger they are this year than last year. So to me, that's a real indicator of M&A deals, but investment banking for IPOs. So I think we'll still see the IPOs. The problem is, are we going to have the support? But that's where there's some opportunities to go in when a stock comes out and the market just doesn't see the value yet because the macro environment is too worrisome.
We think about the IPOs. You have a few here that you mentioned. I see Klarna on here. Tell me a little bit about some of these names. Are you buying some of these names, or you're just watching these names?
We're watching them and watching them carefully for the right entry point. But Klarna, for example, is basically like a firm. It's layaway, but you get your product right now. You don't have to wait till you pay off everything. So I think that's basically the British version or the European version of a firm that has a relationship with Amazon. So we could see some real upside there. That stock, came out of the chute and it's really not done well. It's been dropping.
And you have Chime, Jefferson Capital, a couple of others.
Jefferson Capital is really an interesting one because I just find it fascinating. They're buying the charge-off loans. So basically they buy bad debt and then try to collect it themselves. It's that model where maybe they buy 8 cents on the dollar and the store, the retailer, the auto company has said, okay, this is uncollectible, and then they go out and they find ways to collect.
It's interesting because I spoke to people in private equity, and one of them actually told me, if you look at private equity, it's cratering. Use the word cratering while the S&P was hitting new highs. What do you think is going on there? And you have a few names. You have 4 names here. Are these stocks that you would buy now?
I think OKLO, I think nuclear is going to continue to have a strong run, even though it's hard to imagine.
Okay, so that's your tech pick.
Yeah, that for sure. I mean, up 700% year to date, but there's a lot more to come because there's so much pressure from the AI and from the data centers.
And you have Roku, KTOS,
and
Open.
And I have OpenDoor. Let me tell you about Open. I think that's a really interesting one because of the model. So the model in Open is they're leaving all of the real estate agents aside. You want to sell your house? You just contact Open and they will buy your house, sometimes sight unseen, or actually most of the time, they don't go personally and visit, and you get your money and you're done, and then you can go on and get whatever you want. You don't have to worry about a closing and the fact that whoever's buying your house might not end up with that mortgage after all. And the proof of that is when you look at the fine print, let's say Wells Fargo, for example, JP Morgan, there's so much concern about bad credit going forward. And these banks have taken, bigger reserves. So they've given us all this great news, these double-digit revenue increases, but they're all scared and they're making sure to take that reserve now. Of course, we all know the game is eventually they'll release it when times do get bad and then it evens out their earnings. But I think that Open Door is very interesting. The stock has new life in it because of the CEO, and they have the money to go out there and purchase homes.
And then we look at Apollo, Aris Capital, FSK, KKR, Mid-Cap Financial, some of these private equity names. I want to get back to this for a moment. Is there a potential here because they've been selling off?
Not yet. And the reason is that the AI, and I'll explain why. The model used to be, I'm Apollo, I'm going to go in and I'm going to buy a rental car company and I'm going to fire people and I'm going to negotiate better deals to buy rental cars. And so there were all of these steps that the private equity firms could take, and now they can't take those steps because AI is closing the gap and creating so many efficiencies that the game has turned on them to a great extent. But you could see private equity start to go for these like real small cap names that are $1 billion to $10 billion, because there's some opportunity because everyone's gone Mag 7 and they've given up these opportunities for companies that have the potential to become 100%, 200% winners.
So are you more bullish than bearish? Are you going to stay in the sort of vibe that's been going, or are you starting to get nervous?
I will stay in the vibe. That's a great expression, Nicole. I will stay there, but I'm like ready to pull the trigger in terms of leaving, not going in very quickly, because it's like musical chairs. When it ends so fast.
Right.
And so it's important to be ahead of that, but I'm not going, like there have been times I've had so many stocks, right, in my silo. I come with so many, and now here I am saying, look, well, there's Open, there's Roku, which is still strong, which are the relationships. Companies like Jefferson buying bad debt. I still love MindMed, but that just coincides. I mean, that of course we know what that is. Those are the mushrooms that RFK is going to start pushing soon instead of traditional anxiety medications. So here I am looking at these unique niche plays that are actually very risky rather than the big players because there's too much downside to come.
Hilary, Kramer, great to see you always, founder of Kramer Capital Research and Chief Investment Officer there as well. Thank you, great to see you.